So over here, we have another move down. We've got a sell condition right here. Okay, but this is invalid because everything's pointing up. Now, we get the sell condition, price moves down, and we can draw a trend line here. Okay, and at the point of this break, the medium-term moving averages come back in order. When it breaks the trend line and pops above, that's when we get our okay, good, awesome. That's right. We've got the longer-term moving averages are in buy. The blue is above the red. Okay, the lime green is above the magenta, and we've got a nice little pullback taking place here. You know, everything is in line except for our short-term moving average. Okay. Now, there's really on this chart, there's not really much of a good place to draw a trend line. It's pretty steep. It's, you know, there's some sideways action going on here. Some little candles, a big candle, another little candle. So there's, you know, there's just not much of a good trend line to draw here. Okay, this is a pretty tight pullback. So what we're looking for here is we're essentially, this is a current chart of the 4-hour Aussie dollar. Okay, essentially what we're looking for here, when this candle closes, if we get a blue arrow, that's going to be an entry condition. Okay, and let's just say, for the sake of the webinar, it closed right here on this line. Let me make that a little thicker. Make it green, make it really thick. Okay, I'll make it even thicker than that. There we go. So now we see it. Okay, if it closed right there, okay, that would be our entry. Our stop loss would go down here. There's a nice tight stop. It's not too bad for a 4-hour chart. Okay, it looks like it'd be about 48, anywhere between 48 and 50 pips. Okay, so our stop loss is going to go down here, somewhere right in there. So that's about 48 or 50 pips. Now what we're going to do is we're going to target 2 to 1. So we're looking for 100 pips, which is 106.72. So let's put a target in there. 106.72. Okay, right there. Okay, so that's how we would play that out. That's what we'd be looking for if we get a buy entry right here. Okay, now that's a live chart. So that's, and interesting. This is the kind of thing that we're looking for. This is the kind of setup that we want to see. All right, this is the kind of thing that we need to see taking place. Okay. Whoops. I'm getting a lot of stuff. You guys are blowing me away here. Okay. Let me try and read through some of these questions here. John, this is a good question. 16th to the 20th of July, the red is above the blue, but price is still rising. Do you take a buy trade? No. What we are, let's see, 16th of July. That is back here. Right there. Okay. Okay, we get a crossover back here. Okay, so what we are, and price is rising. Okay, this is a very good observation here. Okay, now what we're doing is we're looking for specific windows of opportunity. Okay, and this is where the patience thing, comes in. Okay, and this applies to any time frame that you're trading, and I'm going to show you that. Okay, I'm going to drop down to some lower time frames and show you what I've been talking about. So we initially get, you know, the red is above the blue. It crossed over right here, but price is still rising, and it's definitely moving up. So, you know, this, you know, did we miss an entry here? Oh no. You know, if we go back a little bit, the red crossed, you know, the blue here, so we're down right in here. Now, this is essentially a sideways market. Okay, there's really not much going on here, and there's not much that we can capitalize on. Okay, the red crossed the blue here. But the market is still essentially in an uptrend. I mean, it's moving up. You know, overall it's moving up. But the red crossed the blue here, and so essentially we're not not looking for any buy trades right here yet. Okay, the market's changed direction. The medium term is down now. The long term is down now. And we get a sell entry right here. Now this would have been 100 pip stop. Okay, you could have put it up here, maybe just right in here, 100, somewhere around a 90 or 100 pip stop. Okay, and the market moves down, comes down for only 85 pips. Okay, well that's pretty close to 90 pips. If our stop was 90, we could have moved our stop to break even at that point. But this, so that was a potential stinker. Okay, and then we get it turning around over here. Okay, and it moves up, but everything's still in sell. The longer term is still in sell. The medium term's up, the short term's up. We get a pullback and a rejection, but that's not what we're looking for. Okay, we're looking for the right entry. Okay, and we would not have gotten the right entry for a buy trade until somewhere over in here. This would have been a decent one to look at. That would have been a stinker too. Okay, but this one would have worked out. This one would have been our entry. Okay, it would have been 80 pip stop. We'd have been at break even right now. Price is pulling back, and never would have hit our stop loss. Okay, and it's creating a swing point now. Okay. And now it looks like it's trying to move up. So let me show you guys. Let me show you guys a little trick here, and I love this trick. Okay, this would have been an interesting scenario. Okay, the medium term was up, and the long term was down. Okay, and the short term was down. So let's take a look at. Let me get rid of some of these lines. Okay, let's take a look at, here's the 5-6 crossover right here. Okay, let's take a look at what the 1 hour is doing. Okay, we're mixed here. We've got some very mixed signals here. Okay, we don't have anything that we can capitalize on. So let's go to the 1 hour and find that line. Okay, here's our line. Okay, now we have an interesting scenario here. The medium term's down, the short term's still down, so that's good. But we still are mixed. The long term's up on the 1 hour chart. And the everything else is pointing down. So let's move to the 15-minute chart. Whoa, here we go. You guys see this? Everything's in order here. This is what we're looking for, guys. This is what we're looking for. Okay, so now we found a trend. The 4 hours mixed. It's being weird right now. It's mixed. We go to the 1 hour. That's mixed. It looks like a it looks like a close-up view of the 4 hour. So we can't really do a whole lot here. Oh, we moved down to the 15-minute, and oh, now we can do something. We've got a trend here, folks. This is what we're looking for. Okay. Now this was a weekend gap right here. All right. This was a weekend gap, and when the market opened, it gapped down. Okay. So what do we do? Well, let's assume that the market didn't gap down, and let me be a little tricky here. Okay, let me put a substitute candle in here. Okay, let's say that this this weekend gap didn't happen, and this is the open of the new candle, and this is the close down here. Okay. Does everybody see why I did that? I'm just using this as an example, but we've got another couple of killer examples coming. Okay, so everybody see why I did that? This is just for an example. Okay, awesome. So right here we've got a nice pullback. I can draw a trend line, guys. Okay. I can draw a trend line right like that, right off of these lows. I can wait for a break. Get the break right there. Bam, we are in. Stop loss goes up here. Okay, it is looks like about a 20 pip stop. So we're going to target 40 pips. Bam, right there, 2 to 1, guys. Tight stop on a sideways market on the 4-hour chart, sideways market on the 1-hour chart. 15 minutes shows a killer trend, and we've just made a 2-to-1 target. We could have risked anywhere between 2 and 5% on this trade, and we would have made anywhere between 4 and 10% on our account on a 40 pip trade. This is beautiful. This is awesome. I love this stuff. This is the kind of stuff that we need to be looking at. This is how we need to be doing this. So let me get to some questions here. There's a lot of them that I might not be able to get to, but definitely post this stuff when the webinar gets over, okay? How many pips does it move from the entry price? Should we move to break even on the 15-minute? When you enter a trade, okay, and you place your stop loss, this would have been our stop loss. And once we get down to 20 pips, okay, right here is where we would have moved our stop to break even. Okay, so what we'll do would have been right down here somewhere, I think. Yeah, right in here. So once price got down this far into our favor, we would have moved our stop to break even. We're in a free trade now. We're in a free trade, absolutely free trade. Okay, this is so important. We'd have been in a free trade right here. Price moved down, nails our 40 pip target, which would have been right there somewhere. Somewhere right in there. So, yeah. Okay. Our initial stop was right up here for about 20 pips. Okay. We move that to break even right here. And it comes down. We're in a free trade at this point. Bam! 40 pips. Right in the bag. Yeah, DJ, this is kind of what I was going to say earlier. DJ, you said a great example to dispel the trend only happens 20% of the time. Always a trend somewhere. That's my persuasion too. If there's something going on in a higher time frame and it's mixed and you're getting a lot of false signals, you can take those signals, okay, and you can drop to a lower time frame and look for a trend, and you can trend trade that until it turns around. Okay, now let's move on. Let me move on here. We get another pullback, okay, right here. It bounces off the 21 period moving average. We get the 5-6 crossover right here. So here's another entry. Okay, our stop loss would have gone right up here. That would have been a 16 pip stop. So we are looking for 16 pips in profit to move to break even. And that would have happened somewhere around here. Okay. So we're going to move that down here. Yep. All right. And so what are we going to target? We're going to target 2-to-1. That's 32 pips. Well, that's right down here somewhere. Whoops. It's right down here somewhere. Now, the spread may not have allowed us to hit our take profit. Let me get rid of these. Let's just get in the way. Whoops. Come on, cooperate. There we go. Okay. So our target was down here. Once price moved down here, we would have moved to break even. We're in a free trade, so if price pulls back, which it did, we got to break even down here, and it pulled back and almost took us out. Okay. Now, price moved down again, and then came down again, and we hit, another 2-to-1 trade. Now, if we're risking 2 to 5% on our trades, then we would have made between 4 and 10% again. Okay, so we're 2 for 2 in a sideways market on a higher time frame. All right, and we've made, if we risk 5%, we've just made 20% in 2 trades. When was the last time you guys did that? When was the last time that you knew somebody that did that? When was the last time you could pick this and say, okay, I see this, and this on the higher time frame. I'm going to see what's going on the 15-minute time or the 1-hour time frame, and then drop to the 4-hour time frame. I want to see what's going on. And lo and behold, you find a trend, bam, you just made 20% in 2 trades on a sideways market. Okay, that is killer stuff, man. I'm just going to get to some questions here for a second. Yeah, all these moving averages can be can be applied to the 5-minute chart. Yeah, if you guys want to trade the 5-minute chart, I prefer to use kind of a multi-time frame approach, and that's why I went to I want to make sure there's enough difference between the time frames to make a difference. And if you're on the daily, you'll want to look at the 4-hour and the 1-hour. Okay, and if you're on the 4-hour, you want to look at the 1-hour and the 15-minute. The 30-minute doesn't really offer much in terms of difference. You can if you see a change on the 30-minute, you can drop to the 15-minute and kind of pinpoint your entry a little better and see what and wait for something a little bit more specific on the 15-minute, or you can go to the 5-minute and do it that way. You can do the same things. You can go to the 1-hour, 15-minute, and 5-minute. Or the 1-hour, 30-minute, and 5-minute. But make sure that there's a combination of these. And I'm going to jump back up here and look. It's right near the bottom of the market here. Okay, and it turns around. Now I'm going to do something kind of fun. Okay. I am going to just take the 5-6 crossover. Okay. Now we're in sell here on the longer term. The medium term is down, but the short term is up. Okay, but overall, like, we can look at the charts. If we zoom out, we can look at the charts and we can see that this thing's moving up. Okay, and it hasn't completely changed directions yet. It's coming up, making some very wide swings down, coming up, makes another wide swing down, comes up, makes another wide swing down. So it's moving in fashion and in relation to everything that's been going on. It's moving normally. Okay, it's just that the moving averages have changed directions here a little bit. Okay, and they're still waiting to catch up. Okay, so I'm going to zoom in here. Whoops. All right, there we go. The moving averages have kind of they're still a little wishy-washy here. We're not getting any decent entries. Okay, now at least not on the 4-hour chart. Now I've taken the close this candle here that popped above the moving averages, made the 5 and the 6 crossover. Okay, so let's look at the 1-hour chart and see if we've got a change in direction. Well, nope, we're still down. The medium term's up, but the longer term is down. The short term's up, but we're not doing a whole lot. We're kind of seeing the same thing that we were seeing back here. So it's mixed. Okay, it's not up yet on the 4-hour or the 1-hour. But what does the 15-minute look like? Okay. Uh-oh. Check that out, guys. I did it again. I picked another change in direction. I picked another trend on the 15-minute chart. And look at this. It's beautiful. We get everything crossed over way back here. Okay, whoops. Right back here, everything crosses over to the upside. The longer term moves into buy, the medium term's in buy, the short term's in buy, so that's good. Now we just need a pullback. What do we get? What do we get right here? We move that over, close of this candle, okay? The moving averages are kind of braiding at this point, but we get a nice bounce off the longer term moving average, okay, and price is moving up, okay? So we are going to place an entry right here. The stop loss is, I would probably put it right down below this longer term moving average because that's where price found support. Okay, so there's a 26 pip stop. Okay, so we're going to move to break even after 26 pips, which is right here, right about there. Let me check that. Yeah, it's pretty close. So it's right in here that we're going to move to break even. Okay, so we're looking for 52 pips. Okay, so 52 pips is, well, look at that. We just barely got it. It's right to the top of that candle. It's actually right there, just below the top of that candle. Okay, 52 pips would have been right there. Okay, 52 pips would have been right there. Guys, you just made, you took 3 trades in an awkward market, looking at the 4-hour chart, dropping to the 1-hour, and then dropping to the 15-minute, pinpointing an entry. Okay, before the trend even changed on the higher time frames, and you've made anywhere between 4 and 10%. Okay, so in 3 trades, if you'd risk 5% on all 3 trades, you're up 30% in 3 trades, guys. You can do this 3 times a month and be fine and go play for the rest of the time. You can work, you can work an hour a week, and in a couple of years you're going to be rich, more rich than you could even think of. Okay, that's the kind of thing that we're looking for here. That's how we are doing this. That's how we're that's how we're that's how we play the game. We're smart about it. We know what to look for now. Okay. I've got time for a couple more questions. I want to get to a couple more questions here. I know that I've missed a lot of questions, but take those questions and post them on the website I gave you. And I'm going to go back to that and show you. So all right, we got a question here. Let me read this real quick. Yeah, here's a great comment here. I know the trend is my friend. This is what I've been doing, trying to do for several months now. I love the 3 pairs of the MAs you use. It qualifies everything beautifully. No emotion laden decision making is needed. Using short trend lines is an effective aid. I just did not think about it. My trend lines have always been over longer periods. Thank you for addressing the psychology too. Lovely training. Thank you. Awesome, guys. Here's a good question. I don't understand how you equate 40 pips profit with 30% gain in a portfolio. What is your recommended lot size? This is a good question, Danny. This is an awesome question, and I wasn't saying 40 pips is 30%. That's not what I was getting at. We took 3 trades. Okay, I showed you guys 3 entries. Okay, and had you risked 5% per trade, and what we were doing is we're targeting 2 to 1. So we risked 5% to make 10%. Okay, we risked 20% to make 40 pips, or 20. I'm sorry. We risk 20 pips to make 40 pips, and that 20 pips risk is going to equate to 5% of our account. Okay, so let's say we've got a $1,000 account. Okay, we're going to multiply this out. We're going to find out what 2% is. We're going to multiply 1,000 by 2%. Okay, 0.02. That's $20. We can risk $20. Okay. Now, our stop loss on the first trade, I think, was 20 pips. So 20 divided by 20 equals $1. That's going to be our lot size. So $1. Okay. And we're going to make, and we're shooting for 40 pips because that's, that's a 2 to 1 target. So 40 times 1, that's where we're looking for $40. Okay. Now, $40 divided by 1,000. Is 4%. That's that would have been, we would have risked 2% and we would have made 4%. Okay. Now if we risk 5%, 1,000 times 0.02 is $2. Okay. So let's see, 2 divided by 20 pips is another $1 lot size. No, that's not working out right. 1,000 times 0.05. There we go, 5%. Okay. Now 50 divided by our stop loss, that's what our lot size is going to be. It's going to be 2.5. It's going to be $2.50 lot size. So 2.5 times 40, okay, that's what our gain was, is $100. Okay. Now 100 divided by 1,000, which was our initial starting balance, 10%. That's how I got that. We did 3 trades like that. So you do 3 trades like that, and you made 30%. Okay. So let me get to another question here. daily, how much time average is required in front of the computer for a real consistent profit? You guys know I mentioned earlier that you can spend like an hour a day or something like that looking for these particular setups. Or an hour a week or something like that. What you'll need to do is you'll need to figure out what times you can be available in front of your computer for, say an hour or 2 hours just to look for setups. You want to make sure that, like if you're looking for at the 4-hour chart, like this would be a real relaxed way, excuse me, to do it. Okay. You're looking at the 4-hour chart. Okay, just leave your 4-hour charts open. Pick any number of different pairs that you want to, 5, 6, 7, 8, 9, 10 pairs, whatever you're comfortable with. Okay, the 4-hour chart's going to move pretty slow. And whenever you see a potential setup, you got an entry condition here. These are the weekly separators. Okay, so you got you got one at the end of this week. You got one here midweek. You got another one here, and another one here, and another one here. And this is just one pair. So you got 1, 2, 3, 4, 5 setups. Okay. There's another one here actually too. So 1, 2, 3. You got 5 setups inside of little over 2 weeks. Okay. So that's what this is going to be a real relaxed way of doing it, and it's going to be really low stress. You wait for something to happen on the 4-hour chart, then you drop down and you check then you drop down and check the 1-hour chart and get an idea of what's going on there. Then you drop down to the 15-minute chart and look here. This is at the close of this candle right here. That's where we got the short signal on the 4-hour chart. Look. Right there. That's where we got the short signal. Okay. And we looked at the 1 hour. This is our short. It's real interesting right in here. It's kind of sideways and choppy a little bit. Medium term's down, so that's a good thing to see. We go down here to the 15-minute chart, and we got a perfect downtrend. Okay. What do? I showed you guys draw a trend line, get a break. We get everything in order. Pow. Stop losses up here. There's 10 pip stop with and we're going to target 20 pips. Okay, so at 5% of $1,000 account, we're risking $50, and we're going to look to make 100. Okay, and comes down, bam, 22 pips. We just made another 2 to 1. Go home. You just made your money. Hey, cool. I made my money for the day. I'm in. I'm out. See you later. I just made 10%. That's what we want to do. We want it low stress. We want to know exactly what we're looking for. When we see it, we want to jump on it like you know what. Like just jump all over it. So that's all I got for today. Let me go back here and give you guys this website again. Now, I know I missed a lot of questions. Okay, there was a ton of feedback I got, during this webinar, and that's awesome. I love that. I love it. I love it. I love it. I need you guys to take those questions that I did not get to. If I did not answer your question, let's see here. Oops. There we go. If I did not get to your question, I need you guys to go to this website, forexprofitmodel.com/profitmodel.html, and I need you guys to make a comment. I need you to ask me a question. It can be a question, a comment, a kudos, whatever. I need you guys to make a comment there. Okay, I need you guys to do that for me. I need to see that stuff. And yes, this is going to be recorded. It's going to be posted. Sections of it are going to be posted over the course of the next week on YouTube and on Facebook. You can find that at forexprofitmodel.com, facebook.com/forexprofitmodel, and on YouTube as well. The videos are all posted there. So that's about all I got for today.